Hello, hello, hello. Am I audible? Hello, hello everyone. We are back to trade crypto in stocks and indices. The indices are in continuous rally, having green candles for a week or more than a week. So it will be interesting and very fun to trade and analyze the market. It's in continuous bull run and the market is going to is it able successfully going to breach the all-time highs? So let's see. It's the chart of 1 minute time frame of Bitcoin. The Bitcoin is has seen a sharp sell off here, and yesterday also we have talked about that it's in the crucial range where it's in the make or break situation. It might either we can see a sharp decline in the Bitcoin prices. So it will be interesting. Let's check how Dow Jones and S&P 500 and NASDAQ is performing, the major indices in the market. Let's start with the Dow Jones. We have the two major resistance forming today on 1 minute time frame. The market has bounced two or multiple times from these support and resistance. So breakout in either of that successfully breakout in either direction will help us to understand the market directional trend. We are currently watching US30, the major Dow Jones index here, and let's see on bigger time frames. The support level of today also, it has come from the past market movements. So let's extend this line and like this. And we can see a trend line forming lower low, continuous lower low formation. So it's a major downtrend here, and we can see a uptrend from here. So it's not that major, so we will go on upper time frame and see how the market, is there any major trend there. We can see two bounces upward forming higher high, higher low. So we are going to see the second stick time frame to see more trades here, to get multiple trades on higher frequencies. We are applying 15-second time frame here. It will give very frequent data, and we can get multiple trades here. Based on current support and resistance, we can draw the Fibonacci levels here to see if the market gives breakout in a particular direction, so we can somehow get an idea of up to what level market can sustain and fall. So let me draw the Fibonacci's here. Drawing Fibonacci from the same existing support and resistance level, or swing high, swing low. We can perform both. And let me decrease my let's decrease the intensity of the color, intensity of the levels. Here we go. We can see some of the retracement at the 23 level and 23% level, and the major 76% level of the Fibonacci series. Now we can see it's forming cup and handle pattern here. So we can expect a downfall in the US30 if the trend continues here. In past few days we have seen the market in greens, continuous green trends. Let's try to add some indicators here like Bollinger Bands. If Bollinger Band can give a certain idea or something. It's not always that useful, but we can use to take a scalping trades here with the strict stop loss and target. We can vary the target as per our desire, but while taking trade we first have to analyze the stop loss first, then we have to enter. Always try to decide the overall stop loss of your entry trade, so to maintain the risk of the trade. Let's get an idea how to trade the Bollinger Bands. Usually there are three bands in the Bollinger Band. The middle band, on an average, it's indicate the average of the candles, means it somehow replicate the simple moving averages here, and the red band show the positive deviation from the simple moving average, one standard deviations, and similarly we can see a negative standard deviation of +1 in the negative direction. So it's somehow whenever candles crosses the positive one standard deviation, we generally expect the market to take a reversal or correction up to maybe somehow up to the simple moving average or the mean, but it's not the hard. This is always true. This is hard and fast rule sometimes happen, and the trend might continue with the in parallel to the Bollinger Band. And once we see some correction, we can expect up to the moving average or maybe the negative standard deviation. Similarly, we can add the multiple standard deviations line on Bollinger Band. We can add like 2 standard deviations or 3 standard deviation based on how much swing we want to add, how much deviation from the normal average. Similarly, if we want to trade over here based on the Bollinger Band, once we see a correction and the market falls below the Bollinger Band, then we can take entry on the next candle opening here, and we can put our stop loss based on fixed point or maybe some other conditions if you want to trade algorithmically or something. And if the market correct from here, we can put our targets up to the first standard deviation, or maybe if it crosses the positive standard deviation. And it is not always going to true. Sometimes we can see we can get a better some scalping trade here, and right now we are seeing a 15-second time frame here, so we can expect some percentage move up to 0.5 or 0.1%, 0.05% or 0.1% movement at least. This is about the Bollinger Band, and let's explore other indicators here. Right now we have added the support and resistance based on past, and we have added the Fibonacci levels on the swing high and swing low of the channel. And we can add multiple Fibonacci inside the Fibonacci. Means we have added the on bigger swing we have added the Fibonacci, but on the smaller swing also we can add the Fibonacci. Like in this swing, smaller swing, we can add the Fibonacci to make the partition between the smaller trends if it successfully retraces to the smaller levels. We are seeing a sharp buying here and slow selling here, because it took less than 5 minutes to swipe hold up to the today's high only, but it took say like half an hour or 1.5 hours to take movement up to the bottom. So we can say that buyers are more aggressive than the sellers, and they are participating more aggressively than the seller, and the interest toward the upward direction is more on the retail investor, because usually the retail investor usually use the market order to enter the positions. An institutional investor or the bigger player usually enter with the limit orders based on the circumstances they trade. Right now the market is trading at 40,850, and we are expecting a market breakout in upward direction as the trend, what we are saying, the market trends continuation, the green market bull run. So and the bottom is shifting upward, forming lower high each time, and higher high stick to the topmost 40,900 points. So let's see if it able to successfully give breakout above the 40,900 level. Let's try to explore more few indicators like McGillivray dynamics. Let's see what does it do. We can get any insights from it, or value, we can get some value addition to our chart. What it appears at the first glance is it's like a moving indicator which follow the candlestick bit delayed. So let's add another indicator and check. We know about super trend and everything. Those are pretty lagging indicators, so we will try to explore some new pivot point indicator or something. So pivot points, let's explore pivot point moving average indicator. Okay. We can see some butterflies and formation of doji at the top. So doji and the butterflies are the reversal candles, usually signifies the market reversal from the current market trends. So after that we can, after validation from the other indicators and our technical analysis and the momentum change in the chart, we can take trade based on the candles and candlestick patterns and candlesticks, like the current formation of doji and the spinning top here. So we can take a scalping trade here, trade with keeping the strict stop loss above the swing high here. Let's now hide this candlestick indicators and let's explore few more indicators here. Let's see the how NASDAQ is performing. US 100 is the combination of top 100 stock on the NASDAQ. So it gives idea about the most 100 performings, means on average the top 100 tech stocks in the US market and average of that based on that average index based on the market capitalization here. Okay, we can see different scenarios here and completely different market trend as compared to the Dow Jones here. We can see on NASDAQ the sharp buy, after that a huge sharp sell, sharp selling pressure. After that the market from 49,830 to 19,660, approximately 1,000 point sharp sell off, and now we are seeing a bit of buying. So if it continues also, in last few days we have seen a good buying, and market seems pretty volatile here, so it will be interesting to take some scalping trades here. So let's explore some. Let's add some support and resistance and some levels, the major support and resistance levels, and levels where the market can sustain and expect it to move. First, let's draw the Fibonacci based on the swings. There is on TradingView there is auto Fibonacci indicator, which you can use to automatically generate Fibonacci at the, if you don't have idea how to draw the levels, so it will draw the auto Fibonacci at your chart. So it will be helpful for you to start how to use a Fibonacci in your trading for the entry level. Okay, first you put the 0% level here and then try to reverse the swing, and if you can see some strong levels or price sustain at particular level, then you can see it's replicating the correct market what you have placed the Fibonacci, where you have placed the Fibonacci. Okay. Now let's try to check some more indicators and test it on the NASDAQ. Let's try to add pivot points here. So we can see the pivot points level here. It's not that useful on lower time frame, so let's try to add another. Here is one indicator, abnormal volume and abnormal trades. Let's try to add abnormal trades here. If we can see something useful or insightful, that will be interesting. Let's try to take the S&P 500 here. How S&P 500 is performing, and is there something deviation from these indices, Dow Jones and NASDAQ in particular. Then we will be analyzing the stocks and the cryptos, how the stocks and cryptos are performing. And in further we will, if we some time will be available, we will be trading, try to analyze the options market here, how the major option liquid options are trading and what premium they are providing, and we will try to deploy some strategies here, like butterfly, straddles, triangles, and if some advanced synthetic option symbols possible, we will try to. So it's, we can see US 500 is at the support here, and we can see if it's might be testing the support here soon. And we have seen a sell-off here, somewhat similar to NASDAQ, but the recovery is not that good because it's combined the top 500 US stocks, including every sectors. So it's appear bit weak compared to NASDAQ and Dow Jones. Let's see if we get some scalping trade here on of some breakouts in certain direction. Let's try to add our main Fibonacci retracement levels here, from swing high to swing low. Let's reverse it. We'll be decreasing the transparency for clear visibility of the chart. Right now it's testing the 76% Fibonacci levels, and the resistance, the support, the major support, and it's today formed support. Let's see where the market is heading. 55,600 is the 5,600 is the current market trading price of a S&P 500. It is bit consolidated S&P 500, so it will be good to sell the triangles and straddles here. The selling will be have more edge over buying on the range bound market. Now it's testing the major support which has formed due to the previous market trend. If it able to successfully breach the current market level, then we can see a huge downfall and sharp downward market movements. So let's see. It's in the make or break situations. We have seen forming the today's low. Right now we are trading on 15-second time frame. Okay, we are seeing a sell off. We will be entering our position right now and try to keep our stop loss intact and strict. We have put our stop loss to 55.94 and we have taken the put. We are expecting the market to continue its bear trend, or if the market breaches the 55.94 and give the correction, we will be taking an exit from the current positions. We will try to keep our risk to reward fixed so that we don't fall in the end up doing marketing or accumulating more positions, which can be very harmful in terms of our portfolio, which can lead to devastating positions. We have taken a scalping trade here. Let's see how it's going. We have taken the put in long direction. We are expecting the market to fall and reach the current low, or if it corrects and recovers to 55.94, we will be going out of current positions. We will be exiting. We have exited the current position. Now market has formed a double bottom here. Let's try to add another indicator and see if Cambrilla, we are added Cambrilla here. So let's see what it does. Okay, it's somehow replicating the same support and resistance. It might be off based on, and the the levels it has drawn is somehow we have added early, so we will be adding another indicators. We have the currently these levels added by Cambrilla. So let's try to add another indicator and see. Standard deviation somehow, okay, it's underlay indicator. Okay, it's so the deviation, the standard deviation from in the price from average SMA, from the SMA simple moving average of 20, and we are taking for calculating the average for standard deviation we are using the close here. Sometimes we can use the open high low close or high low close only. We can use different combination to get the best useful. It's showing how much deviated the price or sharply the price moved in a particular direction. The more the price trended in one direction or sharply moved, the more the value of the standard deviation chart. Let's try to add and analyze another indicator, the depth of ask and bid. Let's see what this chart and this indicator. Depth of ask and bid. We are not able to see any value, so let's analyze delta flow and delta rotations. Okay, The 76% Fibonacci level has shown have been performing as a major resistance, and the market has been multiple times bouncing from these levels and reversing from this point 55, 5600, and 5600 might also be due to its psychological point of 4600 being a numerical round of numbers. So due to that also it's performing as the major resistance level. There are multiple type of resistance and levels which can be become a support and resistance and considered as support. There is the static, dynamic, and some are round of number like that. Let's try to add some. Right now it's again going to test the 5590, and this time it's going to test third time in 1 hour. We are expecting in faster test only we are expected to reach the level, but it has given a correction and it's going to again test the 5590 level. Let's check the US30. Okay, Dow is pretty stronger enough than the S&P 500. It has formed a higher high and it appeared to be more strength than having more strength than S&P. Let's check the NASDAQ. Okay. NASDAQ is bit strong and holding above the its lower high, lower low, and it's holding at currently at 19,700 point. US 500. Let's check the S&P 500 if it. Okay, now it has given a breakout. Okay, we can see a trend line formation here. So let's draw the trend line. Let's try to browse some advanced Fibonacci levels theories, so we can add more. Like Fibonacci levels is continuous, like addition of all the levels as we moving away ahead. Say like the currently market give the swing of 1, then the another swing form give of 2 of the width. The, the deviation between the higher and low is 2. So we keep on adding those series and we get the Fibonacci levels of continuously adding of the last two. So Fibonacci level is pretty advanced thing. We will try to get some advanced theories to add to our chart and get more insight from it. Okay, right now it's testing the trend line which we have drawn, and it has successfully rebounded from the 5590 level. Now it's again resisting from the trend line, so we will try to take a scalping trade here. In the Fibonacci, the way we calculate the Fibonacci is based on the golden ratios. So basically we have in the Fibonacci level, we have the level of 50 to 61% of the golden Fibonacci region, which is commonly very popular for the retracement level used by the traders. Especially it can be very significantly region where the major retracement happens. So let's try to add some more insights regarding the Fibonacci levels. And it's normal, very general when the market is in uptrend. So we draw the Fibonacci level based on the swing higher and low, and we expect to drop it to the 0.5% level or maybe below that if we get some chance and we can enter on and expect a market reversal after that, and the trend continuation after the fall up on the Fibonacci level. And usually the market move in zigzag pattern, so so it's we can just draw the ABC patterns on the chart and retrace the Fibonacci level on that, because candlesticks show too much information normally, and sometimes hard to digest all the information showing on the chart. So it's usually very advantageous to just keep the chart very simple and clean, not too much indicators, colorful patterns and lines, trend lines, resistance. Just keep simple, last day high low, and some weak resistance and support. Weak means previous high, weak low supports, like that. And the Fibonacci level is based on the Archimedes spiral, because it's follow the sector based semicircle pattern. Let's try to add the Fibonacci level with the relative strength index, if we can get some useful insights from it. Okay, we have seen a breakout above the trend line. So we are currently using the stochastic RSI. Stochastic RSI is very useful, and it includes the average of the RSI, and it's a underlay indicator. So whenever it's above the 80 points, we consider it the overbought region, and below 20 we usually consider it oversold region. So whenever the market in above the oversold region, when below the oversold region, so we try to take long positions, and when the market is in overbought position, so we try to sell and short the, try to get a get chance when the we try to sell position. And it can be very insightful to combine it with the Fibonacci levels and the support and resistance. Let's try to increase the period of the RSI. Let's try to make it 26. Okay, So now we have increased the time frame, so we are getting number of double to calculate the RSI, so we are getting very less swings and overbought and oversold points. Seeing a bit of resistance from the 50% Fibonacci level, and we are seeing a sell-off from that point, the 5600 level. Let's see if we get any arbitrage opportunity or some spread opportunity within the indexes. We are now, this is the chart of US 500, and we are going to check the US 100 if we can see any deviation between the chart. Okay, and US 100, what the difference, major difference with US 30 is more volatile because it consists of 30 top stocks which are major market cap stock. Due to that, due to present of less stock, it's more volatile and more having more movement in particular direction, or swings, very usual swings, while US 100 is containing of top US 100 stock tech stock. So it's also volatile as similar, but it's not that swingier and less volatile as compared to Dow. And let's see how S&P and how US 30 is performing, Dow Jones. Jones is more, in past also I have said Dow Jones is having a more strong buying trend as compared to other two indices. We are seeing a strong recovery and reversal in the US 30. So this is for the today. Thank you for joining in. Hope you have get multiple information and very learned about new techniques and new indicators to trade and to gather more information about the trends and how market behaves, and drawing support resistance levels, Fibonacci levels, and RSIs, and more more indicators. We will be similarly learning and exploring new advanced technologies and automated system to trade. And don't forget to hit like and subscribe button to get insights and learn about the latest improvement and things about the stock market. Thanks for tuning everyone. Bye.